Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
Well, welcome back, everybody. I got some good news. I got some bad news. The bad news is you just get me today. Dan is out sick, so we hope Dan speedy recovery. But the great news is we have a very, very special guest, JP Dahdah. JP is the founder and CEO of Vantage self-directed retirement plans. They are known for empowering investors to have more control over their retirement savings. This team and JP have over 25 years of financial world and managing over $2.5 billion in retirement assets. So, JP, welcome.
Thanks for having me.
Hey, absolutely, buddy. So we're going to jump right in. I'm just going to give you some easy questions.
Awesome.
I want the audience to know who you are. But before we get started, what was the vision behind creating a self-directed retirement plan?
Well, one of the things prior to starting Vantage, I was a registered investment advisor.
Nice.
So a lot of pedigree, a lot of understanding about helping people, plan for their financial future. What I didn't know and what I came to find out trying to find a solution for one of my higher net worth clients at the time was that you could actually invest in things outside the stock market with these retirement savings. And I wasn't trained that way, right? So in trying to solve something for a client and doing research, I learned this fact, but kind of serendipitously.
Yeah.
But it kind of shook my world a little bit, right? Because here I am trying to help someone with, I think I know a lot of information. They're paying me for the advice, and yet I didn't know that you had these other options. So that was a moment for me, that kind of like the genesis moment of like, oh my God, the entire retirement industry system is kind of broken because Americans are not being informed about what their true choices are of investment.
Right.
Yet we're all kind of led to, we're all encouraged to put money in these accounts that have certain rules and regs, but the investment option part is the one that, Wall Street has been controlling, I think, for a long time. So that's ultimately how I got started. It was like, I want to be part of the solutions for people, not the problem, And I felt there was a problem with Americans just being misinformed or not truly understanding, because there's a lot of us that don't want to invest in the stock market, right? We have different investment appetites. We find different ways to make money, and yet those options are available if you're working with the right custodian. So what I understood is there's a big difference between what the government allows us to do within these retirement accounts that they've created and what companies that offer the accounts for people, what they allow you to do with your money once you are their client.
Right.
So all traditional custodians are going to be limiting, obviously, their clients' investment choices to the stock market. And I started a company, which are, from a marketing perspective, called self-directed IRAs, because the account holder is the one that's in control of the decisions. And so IRA custodians and administrators that are alternative asset custodians and administrators, we specialize in only working with those individuals who want to have their IRA money with a custodian that is allowing them and specializes in the custody of private market investments, right?
Gotcha.
Of course, real estate being the biggest asset class that we custody.
Gotcha. Thank you. And we're going to dig into all of those things, but I was really impressed reading your bio, and I want to just read that to the audience for a second. So you got some pretty impressive accolades here. Entrepreneur of the Year by the Arizona Hispanic Chamber of Commerce, most inspired leader, or admired leader, I should say, from Phoenix Business Journal. What does that type of recognition mean to you, and how do you reflect those values with your company?
Well, we are a value-based company, but I think ultimately what it translates to is it's adding value to people's financial situation. I mean, if you really care, if you're in a position where, for me, it was, this ultimately is a niche. I mean, it shouldn't be a niche, but it is a niche business. Right. So, I made it our mission to spread the word with as many people as possible about this kind of this fact that I felt when people hear it, it's like, well, I didn't know I could do this.
Right.
Whether it's appropriate for them or not, it's obviously up to them. But I feel that when you are committed to serving other people, when you are committed to having a company that isn't about, look at me, this is what we do. It's really about how can we help? How can we add value? When you're dealing with people's money, money is a very personal, it's a very personal topic.
Yeah.
And so I've learned even through my financial planning days that, there's a lot of like internal curiosity and reflection of, what do I want to do with my money? How do I try to accomplish and win the retirement game? And we all have that task, right? And how you solve for those things differ person to person. But I think part of the reasons for these accolades, honestly, is that you put your head down, you work, you do it to contribute and to add value.
Yeah.
And I think people start to recognize that, that maybe that it's working.
No,
But it's always nice to get those things, but it's really just it's not something that you put as a goal. Like, I want to be an entrepreneur.
Yeah.
I think it's just you do the work, and if you do good work, it's recognized, hopefully.
Got it. Thank you. No, I appreciate that. So for those that are not familiar with self-directed retirement plans, can you break that down, what that means? What's the difference between like a 401k or just an IRA?
Yep. So, there are differences, obviously, with different retirement accounts. There's different types. There's a traditional, a Roth, a SEP, a simple 401ks. The punchline is any of those retirement account types can be quote unquote self-directed. Now, that's a marketing term. So that we had to kind of try to, in our industry, decipher how do we set some sort of differentiator between what Wall Street is offering with those exact same account types, right? Like Vantage offers a traditional, a Roth, same types. There isn't a specific, unique account called a self-directed. It's just the marketing term we put in front to try to let the public know that they're in control of the decisions, that they have the ability to choose where they put their money, and that menu is not limited and restricted to Wall Street and publicly traded securities. So all a self-directed IRA is an account that if you hopefully are setting up with an alternative asset custodian or administrator like Vantage, because we specialize, like if you call us and say, hey, I want to buy a mutual fund, we don't do that.
Right.
So it's understanding that these options exist, but you're going to want to work with a company that specializes in the custody administration of it. But we're not managing people's money. We're not offering them investment products. We're not giving them advice on their financial situation. So there's a lot of differences when you're working with just the custodians, right? If you work with Schwab, you can obviously do some work. You can invest on your own, but there's usually advisors that are also helping. We are literally there to do administration on the account. We offer the accounts. We do the custody work. We do the IRS reporting.
Yep.
But other than that, the self-directed term was meant to say, hey, you're responsible for the rest of it. You've got to identify where you want to invest the money. You've got to, like the products, the assets, the strategies, all that stuff is kind of up to the individual account holder. Now, they can, of course, go to other professionals and to get help, but you've got to make sure that you're working with professionals that are obviously experts in that whatever strategy or asset class you're trying to do. So that's pretty much it. I mean, there really, other than that, there isn't an issue. Now, with 401ks, with a lot of Americans, they have a job, they're working with their employer, and they offer a 401k. 401ks are governed by the plan document that company has adopted, right? And most, as you can imagine, most companies who set those plans up, they set them up with a traditional financial service company like a Prudential or Nationwide or Fidelity or whatever. And those plan documents are written to restrict where it says investments, right? What are these participants allowed to invest in? There's usually a very short menu of mutual funds because the plan sponsors are the ones offering the product.
Right.
What people need to understand is if you're working for a company and you have money inside of their 401k, you're going to continue to be restricted to those investment choices that the plan offers. the trustee of that plan, the one that put it together, we try to just let them know, hey, you have more freedom to set up this plan document to allow your participants to invest in a self-directed manner. And with 401ks, a custodian is not required.
Right.
Okay. What you need is a record keeper to make sure that all the assets and the participants' accounts and all that stuff is being done. And there's, of course, reporting to the IRS. So what we do at Vantage is we offer the participant accounts that people can establish that work for companies that offer a 401k that actually allows them to do other things. A company like Vantage, like our 401k plan, obviously it would be kind of silly if we didn't offer our clients, our employees, the ability to invest in other things, and that's the business that we're in. But it's, if you're the employee, I think what I want people to know is you're kind of limited still to whatever that is, unless you leave that company. And then of course you can roll the money out. So if you have an old 401k, you can roll that money whenever you want to an IRA, like Vantage. But if you're a current participant and that's all your money's tied up to your employer's plan, you've got to wait until certain triggering events happen where you can roll it out or ask if they have an in-service distribution. And I won't go down the rabbit hole there, but I think it's just, I think your audience needs to understand when they're thinking about this topic and they're like, oh, this is interesting. Like, where do I have my money?
Right.
If it's an IRAs, no problem. You can always, establish a self-directed and transfer the money, whatever money you want, and do these other things. If you have an old 401k, you can do it. If you have only a current 401k that you're participating to, I think the thing for them to understand is they're probably still going to be limited, but it's important for them to at least know that if my investment appetite does go beyond these 20 mutual funds that I'm getting, whenever I'm able to get access to that money, I want to understand that there is a company or there are accounts that allow me to do other things.
Yeah, no, I appreciate that. So many people come into real estate, especially our audience, right? They come into this thinking, I have to have cash or I have to get a loan, but this is a different alternative. So speak to the folks that this may be new for them. This is a very new concept. How does Vantage make it easy for them? Where will they start? What does that process look like?
So, I think the very first obviously is this, getting awareness, like there are accounts that actually allow me to fund into investments that are not just the stock market. That's number one. I like real estate. How much money do you have in your accounts? Where, what type of accounts do you have? Which is just, I have an IRA over here. And how much money do you have? Then the consideration really is, am I making the decision that I want to take some or all of that money and place it in a self-directed account that allows me to control it and have the ability to fund alternative investment strategies, right? Which includes real estate. Now, within that real estate equation, obviously, there's a lot of different strategies, right? So, and there's a lot of different, you can do commercial, residential, fixed, like all these different things you can do. So the consideration here is really, first, how much money do I have or want to use? And then how am I going to structure that? And am I doing it because I'm really strategy driven? Like I'm a fix and flipper versus, no, I'm just looking for yield. Like I just look for a certain return and what are the strategies that allow me based on the money that I have to get a return that helps me grow my retirement account, right? Because it's going to grow tax free or tax deferred, right? And so I think a lot of it has to do with the considerations around like, what do you want? And then how do we structure it so that you can, and knowing that now that you know that there's a bucket that's retirement savings that can be additive to whatever you're looking to invest in, that it's not like, like with stocks, for example, like you have, it's all electronic, you get some shares and boom, 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 it's done quickly. With real estate, for example, there's all these kind of, how do I structure it? Can I take it down all cash? Do I need to get a loan? Do I have other partners? Am I co-investing with other people? All those things can be done with your IRA. So it's just understanding that those are the three ways that you could actually acquire assets within your IRA. You can pay all cash, but you're going to need a lot more balance to take down a rental property, right? In all cash. You can co-invest, right? So you can the same ways that you can invest outside of your retirement account are the same three ways that you can invest inside of your retirement account. And so just knowing that allows people to say, oh, you mean I can partner some of my money from my IRA some of my money from, that I have outside of my IRA and take something down cash, then technically, yes, you could. Yeah. Could you do that and get a loan? Yes, you could. And can I set up an LLC and Marvin, he puts in his money in whatever type of money he wants to put in. I'm going to use X amount of my IRA. Maybe I got some extra money over here. Could I partner all this money to accumulate enough of the money to buy what I want? And that's really what we want to make sure people understand, is that they're not overlooking the fact that there might be a funding source for investment that has tax benefits that they can utilize. And so for most people, like you said, whatever structuring or strategic way they're thinking about acquiring a piece of real estate, we just want them to know that, hey, if you've got money in a retirement account, let's make sure that you can. It doesn't mean you have to do it or you should. It's just like it's there.
Yeah, no, I appreciate that.
People want to diversify. The other thing, they want to start, I want to buy 2 properties. Okay, well, what are the sources of funds?
Yeah,
and as long as you keep adding, because most of us that are saving money for our future, you have to understand, like, over 70% of Americans have a retirement account, because this is what we're told. Like, you're going to save money, save taxes, and then save for your future through these tax-favored vehicles. So when people are thinking about building a portfolio for their investing, the reality is a lot of Americans have the largest bucket of their savings in these accounts, and they're not thinking that they can invest in real estate with it. So that's where hopefully what I call the moment of impact comes in for people is, wow, now that I know this, how does it shift my thinking around how I'm building my retirement future or my portfolio or whatever?
No, I appreciate that. I call my financial advisor anytime something changes in the world, right? This political year, so I call them when things went different, right? Yep. Talk about support, because that's one thing I love about them is I can call them at any point in time.
Yep.
Tell the audience, what kind of support can they expect from Vantage?
Well, they can think of us like your guide.
Okay.
So if you show up and you need some guidance based on, that we have the knowledge, we have the IRA retirement plan expertise, there's elements that are like transactional, like, oh, what forms do I need to complete? That's simple stuff. Like, obviously they're going to call us for that. But when it comes to wanting to do an investment transaction, they might call us and say, they're leveraging the knowledge that we have, because they don't know, like, that maybe if they're thinking about a loan with this transaction, that it has to be a non-recourse loan, that there's rules that they need to understand and impact on those decisions that might be different than what they came into as a client. So yes, we want them to, of course, think of us as the company that can help educate, provide information, have them, provide information that helps them, like, think about what they should be thinking about, what are the considerations. Like, if they're trying to make a decision on how to do something, then our team can be helpful to say, well, if you do it with leverage, here's some considerations. If you do it, here's some rules. So it's not advice, and they're not going to call us with the same question that you called your advisors, say, hey, it's a political year. What should I be thinking about? What should I be investing in? We're not going to give them advice or tips or, things that are going to be even closely related to that. Like, they should not be looking at our brand as a, like, advisor or money manager type person. I think what they need to look at us is as someone who's going to help them have a good experience with their investing, and also help them get more financial literacy regarding these alternative assets and key considerations that they think about from a transactional perspective, but also from a we like to serve up some options so that they're like, oh, I didn't know I could do that. And so, yes, now you can do it, but here's some resources. Like, we're very resourceful. So it's also like, hey, you want to set up an LLC? You want to work with somebody that sets up LLCs that understands the IRA rules. Yep. If you're going to go get a loan, these are the kind of loans. Well, here's a list of lenders that work with IRAs. And because, from an experience perspective, the last thing you want to do as a client is have to have a huge learning curve and then be expected to educate your banker, your agent, your title company on the things that you're not an expert in, right? So that's how they can really use us is as the educator and also the resourcefulness of the relationships that we've built to help them execute what they want.
I appreciate that. Talk to us a little bit about risk. What are some of the risks that investors who are looking to diversify in these multiple assets, right, into this form? What are some of the risks that they need to consider?
Well, there's always investment risk. So that's for them to consider, right?
Yep.
Their appetite, their risk. From a self-directed IRA perspective, the risk there lies in doing something transactionally that isn't permissible, right? There are prohibited transactions that have been defined by the government. So it's important for self-directed IRA account holders to know what those are so that they don't violate them, right? Now, what's the risk? The risk is that, you got to think about it from the government's perspective. The government created these accounts for tax benefits, but not tax avoidance, right?
Yep.
So the rules are set up by them in a way that doesn't allow, supposedly, people to do tax avoidance strategies, right? Like loopholes that are like going to benefit them and not the government, because the government's going to get their money one way or another, right? Either at the end when you take the money out of the IRA or at the beginning when you pay the Roth, right? So it's important for clients to just have awareness around it's not complicated, but it's important to understand what are some of the IRA specific rules that when they're self-directing need to be understood so that they're not violating. Now, the risk is that the government, IRS decides to audit, which is, random. It's not like, if I have a self-directed IRA, I'm going to get audited. No. That's not the case. It's if you get randomly selected for an audit for whatever reason, and the scope of that audit happens to also include your IRA and your retirement. So that's when the IRS was like, okay, well, what are you investing and how are you investing? And if they see that you bought a rental property that you're living in, that's a problem. That's a problem. Right? If you're doing, I bought a second home, or like I bought a investment property for my son who's in college, but he's living in it, rent free. Those are the things that we wouldn't want our clients to know that is prohibited, but they thought they were just buying real estate with their IRA. Yeah. So there's there's only 2 investment restrictions that exist within these accounts, which is life insurance contracts and collectibles. So that's a pretty simple thing to remember. Like, am I buying a life insurance contract or a collectible? And if the answer to that is no, then you can invest in it. And then there's some what I call people restrictions. There's some entities and disqualified persons that are defined in the code that your IRA should not be transacting with, right?
Yeah, thank you. Give us a success story. Can you share a story of someone listening right now? They're an investor. They got a couple $100,000 in their 401k, whatever. Share a story with us, a testimonial, if you will, with the audience.
There's so many. There's so many different ways to make money. One that comes to mind a lot that depending on what the market is doing and stuff, right? Our clients that right now are doing well are learning private lending strategies, right? There's a need for capital, and with their IRAs, they're able to do some gap. Would call it, let's assume you're working with a fix and flipper, right? Well, fix and flipper probably only needs capital for 60 days. 6 months maybe at the most. So that's a short-term loan that, hard money lenders can lend on, but so can IRA investors, right? So right now in this market, the biggest success stories are the people who are finding borrowers that they can charge 12, 14% interest on a short-term note, and then keep just, doing that because there's no taxes on the short-term gains. So whatever interest rate you're charging, and you're in control of defining what that is. That's what our clients love is, I can just set the term. So if I want to make 14% on my investments, I can just be a lender and demand 14% for my money. And the answer is yes. And it's just the paperwork, promissory note, if it's secured or unsecured. So those are the stories right now that I'm hearing that people are like, oh my God, I'm doing the short term, and I'm finding people that just need money for certain things. And it's really helping. The other ones are assigning different. I mean, we've had people who work on, let's say, spec homes, right, where they're taking down a contract, and there's still a lot of work being done, and then by the time that they're closing, they're assigning that contract with their IRA for a fee, and making just basically controlling assets without having to actually own them. But I would say, other than that, obviously a lot of the success stories have to do with in real estate, any growth strategy. I mean, right now it really depends on what type of real estate investing that you're doing. The folks that are doing, I think, whether they're expanding the footprint of a property for, rental properties, whether it's with pad split or whatever, like doing things that are a little bit more creative, or expanding the cash flow. But that's a growth and income strategy. So again, it just depends on what people are doing. But I mean, Marvin, I could sit here. There's a lot of our clients making a lot of money. In venture capital and angel investing, and there's all the other private equity investing. But when it comes to real estate, it's really driven by the market and what type of strategy someone's producing. And what this market has led us to understand is a lot of our clients can't afford, they don't have enough savings to take down an asset, right? And since there's risk associated, and the pricing is yet what I would call less affordable in certain markets, that you've got to, if you don't have at least $100,000 in your IRA, you're probably not in a position to buy a single, residential investment property in most markets, right? Because most of them are at least over $200,000. So those are the investors that are like, okay, how do I get creative? Why was I going to do that? What was the return I was hoping to, get? Was it for, what was my strategy? And then if it's really just yield driven, those are the same people that are like, maybe I shift my strategy to lending instead of equity, right? So the good news is that these are accounts that were introduced as long-term investment retirement vehicles, right? So it's the illiquidity of the account. In other words, Marvin has an IRA, he can't touch that money as a distribution until he's 59 and a half without a penalty, right? So what we always let people know is one of the objections that people get from real estate is, it's an illiquid asset. Well, that's why I think mirroring those two realities is smart. If you're going to invest in illiquid assets and you've got some savings and capacity to do that, why don't you use an account where you can't touch that money anyways, and you're getting the tax benefits of the growth that you're hoping to receive? If it doesn't mean if you're also investing in real estate outside, then there's also tax benefits of depreciation and all these different things you can think through, but it's still an illiquid asset. So if you're worried about liquidity, right? A lot of our clients are like, well, I wanted to kind of get this money, make this deal happen, and so I can live. Well, that's not the use of this account. This is for long-term compounding growth, hopefully. So it is important for people to understand, what are my liquidity needs, and ultimately understand that anytime you're investing in a retirement account, unless you're over the age of 59 and a half, that's never going to be an account that, unless on the most biggest emergency, you're trying to draw out early, right?
Other than tax benefits, are there any other benefits signing up with Vantage?
Other than tax benefits, if you're diversifying your portfolio, right? I mean, there's benefits of having assets that are hedging, non-correlated to the volatility of that market. I think that's one of the biggest benefits is increased diversification. I think for a lot of people, the benefit is the control. I mean, they like to put their money where they want, right? So a lot of our clients, they really connect with this because they're frustrated, or they feel like, I'm kind of stuck in these investments that I really don't understand. It's like up and down. I don't know how I'm choosing it. Like most people that I ask, where is your money invested? They're like, it's at Schwab. I'm like, okay, well, how is it invested at Schwab? I don't know. I think mutual funds. Okay, well, what mutual funds do you own? I don't know. So it's just like there's not a lot of knowledge there.
Yeah.
There's just a hope strategy. Like I hope it makes me money, but it doesn't. There's just like I don't feel connection to my money.
Yeah.
And so people that want to have control, that at least want or feel comfortable or that they understand a certain strategy, those are the ones that should have a self-directed. I mean, I can give you like usually, right, and even in this industry, in this environment, economic environment, there's a lot of attention being placed on alternative investments because of the yield. Because there's private market opportunities that are going to potentially make you more money.
Yeah.
And so I think for those that are that type of avatar persona, we're like, you know what, I am someone that I've already decided that there are other things that I enjoy to put my money in, or I feel more comfortable putting my money in. Or I know people that are smart making money and I want to give them my money but they're private market funds, right? So
yeah. I really enjoyed this time with you.
Yeah.
A couple of reasons, and I'll tell you why. One, the company was founded on trying to help someone. Mm-hmm. I love that you said that earlier. You're passionate. You're a philanthropist. Yeah. That's pretty damn awesome. But more importantly, like you're right. When we invest our money, we don't really know what we're doing. Our financial advisor is investing that and he's doing whatever he wants or she's doing whatever she wants, but we don't really know. It sounds like your company offers knowledge, understanding, support all the way through. And I just love that about your group. So what's next for you? What's next for Vantage?
Growth. I mean, just, more of this. Yeah. I mean, we want to keep getting the word out. I think, my first vision, I envisioned a world, right, where Americans just knew this was to be. This is also part of like they just know, because there's so many people that are trying to they're trying to solve this problem of their money, and they're disenfranchised. They're not happy with where they're at with their investments or their portfolios or their savings or whatever. And when we are dependent upon only one segment of the market, which is the Wall Street, traditional message, that I think that's just not serving our people. So I think for me, I envision a world where, like, if you're sitting down with your wife, or you're just sitting down saying, I have these retirement accounts that we'll be like, oh, I want to invest in some real estate, and I know who to call and I know what to do, and it's just part of my kind of belief. I already know that this happens, because the biggest challenge that I have is when people hear this, there's a validation process that comes in. It's like, okay, I'm going to call my advisor. Guess what they're going to say?
To stay with us.
Right, because the whole system is structured that their hands are tied, and they're training. Listen, I was trained by a Fortune 100 company. They're not training. They have a different business model. So to me, that's really where what's next for us is continuing to try to create this awareness so that we can also live in a world, maybe, we've been in business for 20 years, right? Yeah. And now here I am sitting with you on a podcast, or, trying to spread this message, and it's still hitting a bunch of people that they might, even if they've heard of a self-directed, maybe they don't know really does it apply to me? Yeah. Is this what I want? When I first started, it was crickets, right? No one knew. So the validation part is important to understand, because you talk to your CPA, they're probably not going to know. You talk to your advisor, they're going to not know, or probably try to talk you out of it. So it's almost like a David and Goliath thing, right? It's like, now that you're empowered with this information, what are you going to do with it? Yeah. And for me, it's just first try to understand it, like know it exists, and then ask yourself, is this something that I want to dig a little deeper into? And if it is, even if it's just from a learning perspective, call us, and we'll help you understand how to think through this. But either an alternative investor with some of your money, or you're not. And it all goes back to knowing yourself. I mean, I always say it's an IRA it's an individual retirement account. So this is the most personal investment account that you can have. And it takes a lot of self-curiosity to know how to make those informed decisions, because a lot of people, to your point, they haven't taken on the responsibility of asking themselves enough questions. There's like, hey, where are you invested, Marvin?
Right,
we're sitting for, hey, where are you? Oh, target-based fund? Okay, that seems easy. Because we're busy doing other stuff. But like, no one should really care more about their money than them, right? I always tell people, I shouldn't care more about your money than you. So if you aren't willing to take that responsibility, that's fine. It's on you. That maybe a self-directed IRA isn't the right vehicle for them. They want to just set in and forget it and hope for the best. That's great. I mean, that's them. It's understanding where you fit in the mix of what's the right account for me, right? And if you now know that there's an account that could be right for you, it's about going through the understanding of, yes, I know it's the right thing for me because I've gone through a little thinking and I can buy what I want and it all makes sense.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.